Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 22nd, 2018. So first of all, I wanted to apologize. There was no video last week. I was traveling and there was literally no reception, and my computer also was glitchy. Anyway, so I apologize. I just had no way to record it. So let's continue to this week's price action. Again, please hit the like button and subscribe to this channel if you haven't yet already done so. Fresh highs on S&P, Nasdaq, S&P 500, or the small caps on Nasdaq. S&P 500 is not far behind, and I think the sectors are still in a bullish mode and showing good appetite for risk. We'll look at utilities, and maybe they're kind of bottoming, similar to real estate. Look at bonds as usual. Lots of price action in dollar and forex currency. We'll look at emerging markets and European equities as they enter the cautionary phase. Gold miners and gold, I think, have entered the bear market, so we'll be looking to sell or short them. Oil possibly is going to fresh highs. Natural gas, I think, is going to go down, and cryptos, well, we'll look at them, but they're really collapsing. All right, let's start with S&P 500, ETF SPY. Bullish chart, unequivocally so, because these are fresh highs. No new lows have been made for this particular instrument, so it's pretty obvious that this is a bullish chart, and its direction is here is clearly up. So we simply need to look for buying opportunities. These are my indicators here on this line, four lines: yellow, red, blue, and green. And usually what I do is I simply look for buying opportunities around the blue line, and this is if I'm buying or going long. And vice versa, if I'm selling or shorting, then we'll be looking to sell or short around the red line. It's just a very convenient way to do this, and it gives you automatically a bias and a way to find a good level to buy or sell. So here on this chart, I would basically be looking to buy around 269 currently. On any spike. Basically, sometimes you can just simply set a limit buy order and look for simply buying opportunity there. QQQ made a fresh high. In fact, this is a all-time high here. 2 weeks in a row. This is previous week's high, and then this week the new high has been made also. Yeah, pretty, again, unequivocally bullish chart. IWM, same thing. Fresh high, second week in a row. This is the latest alert here from 26th of March. Looks like we got a 13% gain there for the subscribers at MasterChartsTrading.com. So overall, again, this is a bullish posture. Small caps and more risky Nasdaq is leading to the upside. So it's pretty straightforward here. We're looking for buying opportunities within a bigger uptrend. The posture is still bullish from various reasons. This is a risky sector. This is a consumer discretionary, like it has, various firms that are more sensitive to economic downturn. And here we can see fresh high. So investors are betting that the economy will be doing, I think, quite well basically at this point. So another decent alert here from the 16th of April, 10% gain. So again, XLY is a consumer discretionary fund, and it is showing, since it's making fresh high, I think it's showing good appetite for risk. But most funds are doing okay as well. So let's look at XLK, consumer, rather technology. So fresh highs here, not so far away recently. Some other ones, XLI, industrials. This one is a little bit under pressure. Notice the price action, very interesting. I'm not making this up, just touch the indicator line. So very convenient sometimes. Some weakness is coming in. Of course, you can see industrial here is not exactly, currently not a very strong sector, but overall still bullish, and I would still look for a buying opportunities on this one. Recently, real estate, here's real estate, broke out, and again, with the indicators that I'm using, it's pretty straightforward. We just look for a breakout or a close above this blue line, and then we will be looking for buying opportunities. This is how I personally trade it. And you can see real estate is doing quite well and it's breaking to the upside. So it's kind of, when we get to bonds and interest rates, we'll see if bonds maybe they're bottoming. It's possible. So here, utilities, XLU. This is a defensive sector, versus XLY, which is a consumer discretionary and has very, like Disney and McDonald's. These are places where people spend money when they have the money, and when they don't have the money, they can't go there, and therefore the economy is not doing great. And since right now the XLY, the consumer discretionary, is at fresh highs, then we can see that economy is doing just fine. Here is XLU, utilities. Now don't forget that utilities are still stocks, and I always caution, especially new traders, against shorting stocks. Because stocks have, generally speaking, a bullish bias. So even though here you can see that we have a close for this particular fund, we have a close, fresh low here on the February 2nd, and at that point I would say, okay, this is definitely a fund to avoid and potentially short. And again, where do I short? I would short at the red line on a rebound. So for example, this couple of opportunities here, one on the 8th of May and another one on the 1st of June, would have resulted in a decent gain. So right now we can see that utilities are again approaching those, I call this conservative short levels. So currently at 51 bucks, it's a decent place to short with a stop above 53 or 54 or so. But these are utilities and these are stocks. So if the general market, S&P 500, decides to just break out to fresh highs, then utilities are, they're part of the stock market. So they're likely going to follow the general stock market higher. So I, generally speaking, caution against shorting equity, especially for new traders. So utilities, yeah, that's possible. They might continue higher. So would be looking, if I was thinking about buying them, I would be probably buying them on breakout above this blue line, which is currently at 53.53. So for example, the same trade was just recently done. Here's IYR. It's an actual alert, real estate. It's pretty straightforward. We simply buy on breakout. The alert was sent here on the 5th of June. You can see the target is not a very big target, but it's enough to make money, and we're already breaking to fresh highs above the for the move from the basically for this year. I think we're getting close to highs for the year for IYR. So real estate looks pretty good, and I think new REITs, or not new REITs, but the REITs, real estate investment trusts, which comprise IYR, individually might get bought, and then this will help the general fund as well. So right now IYR real estate looks pretty good, looks bullish, and this could still happen to utilities, XLU. I mean, you can see they're lagging behind utilities are badly lagging. So next week we'll see if the bulls will be able to penetrate this resistance, which is currently at 51 bucks. You can see before they were not on 1st of June. The bulls were not able to penetrate this resistance. Let's see if this time would be the charm, and then we can say, okay, now that we've penetrated this resistance, we can continue, higher to around 53. If we break above that, then that could be a genuine bullish breakout, and then we can treat utilities as bullish and continue thinking about, and start thinking about them as being in a bull market. Right now, I'm simply avoiding them, and if you're aggressive or so are inclined, then you could potentially, for example, buy puts or sell calls maybe, if you have a large enough account. Okay, let's continue to bonds. So first, let's do junk bonds. And junk bonds, this here we're on the June 1st here, we're approaching February 2018 lows. So far, this low is still holding, and we're seeing a bounce. Not, this chart is pretty bearish to me, and again, if I'm inclined, I would short this chart currently at 36 bucks. But anything is possible. Maybe junk bonds are, attempting to turn around. With stocks breaking to fresh highs, I think junk bonds could surprise many people and, for example, clear this resistance level at 36 bucks and then continue higher at 36.67 here. So, or the 36.14 currently, and then continue to 36.67. So we will see. I can't make predictions. Nobody can know the future. We can only bet on the probabilities. And currently, the probabilities still favor the bears for this particular chart. The same can be said about TLT, the Treasury's 20-plus year Treasury bond fund. So you can see that on the 19th of June of this year, just 3 days ago, we see a touch of the indicator lines here, and now a push lower. So in the past, similar thing has happened. For example, here in May, another thing, same price pattern happened in April and in early April and late March 2018. And you can see that the move, after the price has touched the red indicator line, then it moved lower afterwards. Let's see if this is the charm. Is going to be the, this time will be the charm, and the price actually will continue higher to 124. At which point then we can see that this is generally going to be a breakout to the upside. Currently, again, I am thinking that this is a bearish chart, and I would short bonds. In other words, I think the interest rate will continue higher. Here's 30-plus year, Treasury 30-year yield, and I think, if I'm correct, I think the yield will continue higher, and bonds will continue lower. Now, this is sort of contradicting a picture from real estate fund, and I can see real estate is really breaking to the upside. So I wonder what's going to happen to the Treasury yield. Maybe the yield drops and then bonds rally, obviously. So we will see which one would be correct. Is it going to be is TLT going to drop from here, or is it going to rise higher? So it's kind of a toss-up right now. So maybe we can do, if you're so inclined, can do an options play, like a strangle, I think it's called. All right, let's continue to the dollar index. Okay, let's continue to the Forex universe. Here is DXY, dollar index. So I'm seeing here a breakout which occurred on the 28th of May of this 2018, with dollar breaking above this indicator lines. You can see there are 4 indicator lines, green, blue, red, and yellow. Find out more about them at MasterChartsTrading.com. These are price action indicators. So here from this point on, from April 28th, 2018, until an opposite event happens, I'm going to treat this index, DXY, this security, as a bullish security. So in other words, we have a breakout, and then we can simply buy here around this area, maybe around the blue line. You can see that this indicators call the price action quite well. For example, here on the 12th of June, you can see another little breakout, and then very good opportunity to buy here on the 14th at the lows around 93.45 or so, and then a nice move higher towards fresh highs for the move. Currently it's just correcting slightly, but if I was trading it, I would be buying it like around 93.70, 93.50. Euro versus US dollar, of course, is the main component of DXY, and you can see this. There's a bearish break here on the 25th of May. Took a little while, you know, back and forth here, but I would, again, like around this area here, I would be selling it. I would be selling it at 1.665 or so, and I would have been rewarded already. Was a pretty good move lower. I think we're gonna continue lower from here. I think euro has entered the bear market versus the dollar. British pound, same thing. GBP USD. Here's the bearish break on the 29th of May. Slight bounce, but then again a push lower. So this is a bearish security. Should be shorted in my opinion. US dollar versus Japanese yen. US dollar also, I think, broke out here on the 21st of May, and deeper pullback. Notice again price action around red indicator line here, and now a push higher. So I'm expecting a breakout and a move towards like 113 for US dollar versus Japanese yen. US dollar versus Canadian dollar. Beautiful move higher almost immediately upon the breakout from the 28th of May. It's a 380 pips move. You know, if you had even a small position, it's pretty nice move. Australian dollar versus United States dollar, same thing. You know, we see a bearish break right there on the 23rd of April this year. You can short immediately upon break or on a bounce back. So here the price almost went as high as the indicator, but slightly higher, slightly lower rather. But a nice move nevertheless afterwards. New Zealand dollar, same thing. There's the breakdown. So overall, the dollar is really under, or rather, it's being helped by weaknesses in other currencies, or perhaps strength in the dollar itself. Let me see, US dollar versus Mexican peso briefly. So some of the emerging markets, or here's US dollar versus Mexican peso, broke out even earlier, as early as the 2nd of May. What a beautiful move afterwards. Look at this. Enormous move. Now a normal pullback, but I think again we should be looking to buy US dollar versus Mexican peso around 1964 or so. That would be ideal buying place. Let me see, US dollar, Swiss franc, pretty similar. There's a breakout even earlier on the 23rd of April, and now a normal looking pullback. Some of the emerging markets, so we can compare we can look at the stock markets of the various emerging markets, but we can briefly look at the Chinese market probably, and the European equities. And the currency situation is such that currently the dollar is gaining basically against all other world currencies. The net effect of this is that money is being pulled out of the foreign stock markets, and United States markets are gaining, possibly because of that, or maybe this is just a correlation, but not necessarily a causation. So here's, for example, emerging markets, EEM, and you can see that they're already coming down towards the fresh lows. So this is a cautionary phase, and unless all of a sudden we see a break higher, for this EEM, for this particular security, if I see a close below this maybe 42.79 line, 42.50, that's the line in the sand, and I'll be just avoiding it entirely. So we can look at China because the correlation is quite nice there. So here's FXI, Chinese stock market. You can see this is a cautionary phase. You can see a close below this red line. Now we can look at the currency, US dollar versus the Chinese yuan. And I think there it is. I think that's it, US dollar CNH, right? Yeah. So you can see that the US dollar is gaining versus the Chinese currency, and FXI, the Chinese stock market, is losing grounds in general. So overall, I think the currency fluctuations have a pretty strong effect on the stock market, and since dollar is gaining currently, then other stock markets around the world could suffer. Here's the European stocks, VGK, cautionary phase already end of May here. So we can look at Euro, and we can see that this is about when those breakdowns occurred. You can see the bearish break here around May, end of May, and the fresh push lower for the Euro, even as early as just a few days ago. So you can see that the stock market is closely following the currency. In this case, currency is moving lower, and European equities are moving lower with it. So again, I would be cautioning my subscribers, or I'm already cautioning my subscribers, and if we see a close below this yellow line, which is currently at 56.1 for this particular ETF VGK, then I would be completely avoiding European equities. All right, and then let's look at gold next. So DXY, the dollar index, is moving higher. XAU, USD, gold versus the dollar index is moving lower. Why? Because the US dollar is pulling this particular pair lower. So a few weeks ago, on the 28th, 29th of, or the 25th of May, here I suggested a possible options play. You can see that this would have worked quite well because we see a strong move towards one of the option legs. This resistance has reaffirmed itself, and it's just not looking good at all. So I would say that gold most likely has entered the bear market. Here's GLD, the commonly traded ETF. You can see that it's moving significantly lower. I see a close below support, so it's just not looking good. So I'm again cautioning my subscribers against owning gold currently. Here's GDX. Yeah, not a good looking chart either, so I would short it potentially on any bounce to like 2260 or so. Or if you don't want to deal with shortings, just avoid it. So yeah, as a result of the strength in the dollar, you can see dollar is moving to new highs for the move, and this could be a beginning of a breakout to continue for the dollar to continue higher, and gold will come under pressure as a result of this. Right, so let's continue to some of the hard commodities. Here's U.S. oil. I thought we're gonna come down to maybe $62, $61.90. Now I wonder if this is even gonna happen. This is a bullish security, so fresh highs here on the 22nd of May, pullback, and now a surge higher. So I'm wondering now if it's even gonna come down that low. NG, natural gas, yeah, kind of bounced, well, very slowly rose from the February lows. Here I was pretty comfortable shorting it, around end of May. Right now it's still kind of indecisive which way it's gonna go, but my money is on the downside, and I think we can easily retest like $2.70 here. And finally, here is the Bitcoin collapse, which is happening as we speak for various reasons. But I really don't even look at those reasons anymore. You don't really need it. Here's everything in the chart, and I'm gonna go through this chart again because I've been showing the same chart for, well, basically this entire year. So here is where I think the bear market in Bitcoin began, February 4th, 2018, right there. It was a close below this red support resistance line. Afterwards, we see pretty significant bounces, but once again, I would have shorted all of those bounces if I have a large enough account. If you have a large enough account, you can do this, even though this is a very large, very expensive instrument back then. It was like $12,000 for one single Bitcoin. It really doesn't matter. So you can see the good opportunities, I think, is on break below this red line. You can see nice breaks below this red line. And here is a really good opportunity around April, May of 2018 of this year. Just this area would have been a perfect place to short around 9,500 or so. And notice that if you hold it, hold your short for a significant amount of time, you get a nice gain. There's 33% gain. And even this latest one from the 10th of June, even that one worked out really well already. So you can see this as a bearish security. I think it's going to collapse. I mean, it might bounce a little bit, but the direction is clearly down. Here's Ethereum. Very similar patterns to Bitcoin. There's the breakdown on the let me see where this is, on the 14th of March of this year, 2018. And sometimes you can just short on breakdown. Boom, 40% loss, or rather 40% gain if you're shorting. Big rebound again, but this is a bearish security, so I maintain that this should be shorted. And here's the latest opportunity that was mentioned, and that was on the 22nd of May of this year, and another beautiful move down, about 31%. I think it's going to continue lower. Litecoin is really a king of losers here. It's beautiful move, 50% loss right there. Just from the May of this year, it was, what is it, 170 bucks, and now it's at $82. So big move. and again, very straightforward to trade if you have the indicators. Alright, so that's it for this week's recap. Again, please hit the like button and then head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on alerts and indicators and then sign up for one of the subscription levels. The indicators you get at the higher subscription levels, and I think they're well worth it, because you can see that even one trade like this, basically, it's a great move. 49% gain on the Litecoin here. Okay, that's it for this week's recap. If you have any questions or comments, please comment below. Thanks for watching. Have another great trading week. Bye-bye.